Up only.
10, 9, ignition sequence start. 6, 5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
Up only.
Hello and welcome to Up Only TV, where I have a scratchy voice for some reason. It's a pleasure to have you here. We've got Tom from Dragonfly on the show today. Before we get to it, I want to tell you about our partners at FTX. Go to uponly.tv/FTX. You can make all the trades that you need there today and do like pretty much anything else you want to do in crypto because they're taking over the world. uponly.tv/FTX. Zero trading fees when you swap from one asset to the other on their app, and you can also earn yield on your tokens. That's all with FTX. Thanks to them for being our partners. Hey, Cobie. It's early.
Good morning.
It's early.
GM. Man, that was your worst advertisement ever. I like that FTX pay, they're taking over stadiums, taking over esports team, and then they pay you to do that. I like that. That's cool. How you doing, Tom?
Hey, pretty well. How you doing?
We've got to consult your dying Monstera because we did it in private before, and you have to explain yourself because otherwise people are going to think that, I don't know, that's how you live.
Yeah, I used to get compliments on this plant actually, and now this is the first insult that I've received. I was gone for a couple months, and I asked my landlord to take care of my plants, and she did not do a very good job. So this thing's kind of dying out in the corner over here, but it looks kind of nice. I get comments of this is a fake background, but it's real. I got some real fake brick and dying plant back there. So
Bear market for the plant, but it'll come back.
Yeah.
Also, is this Gauntlet Network
Yes.
Nike merch?
Yes. Yes. Yeah. These are hard to come by. It's a Gauntlet Dragonfly portfolio company is this. It's actually not like a collab, but they just added the embroidery above the logo. It's smart. I'm surprised more teams don't do it.
New partnership with Nike. We bought their sweatshirts.
Yeah.
I hung out with Terry the other day, and he didn't give me anything like that. So
Friendship over.
yeah.
I had to bug them to ship this to Taiwan. It cost them $40 because I was like, I've done so much work for you. Can I just get a fucking hoodie? And so I got the orange one too, which I was not happy about. But these are coveted. These are, I'm not gonna say rarer than Unisocks, but at least on par.
Wow. Are Unisocks still worth
Alright.
50 grand?
Well, 100 grand, at least.
100?
Yeah.
They're
yeah.
150 maybe.
Sorry, I'm fudding Unisocks.
Mine's got a hole in them.
That's the best flex though, right?
I don't think it is. All right. So for anyone that's listening on audio only and can't see what we're talking about, we're sorry. We do this on Twitch. Someone messaged me on Twitter and was like, "You always talk about the chat when I'm watching it, but I don't know what the chat means." Yeah, sorry. If you don't watch on Twitch, you miss half the experience. But for everyone that's listening through audio's benefit, Tom, do you want to explain who you are, how you got into crypto, how you ended up here on this podcast thingy?
Yeah. So my name's Tom Schmidt. I'm a general partner at Dragonfly Capital. We're a crypto venture fund that's sort of split between Asia and the US. Before Dragonfly, I used to lead product at 0x. So I was there for 2 years. Worked on 0x API and a couple of versions of the protocol, Matcha, stuff that people are probably familiar with. Before that, I was a PM at Instagram for about 3 years. So I did the whole Silicon Valley thing and sort of got into crypto during school, during undergrad. I was mining Bitcoin in my dorm room with some friends. Actually, one of them is Ronil Rumberg from Audius. If people are familiar with Audius, so knew him from school, and just sort of went from there pretty much.
That's super cool. And now you're Dragonfly, and you're on your Twitter. It says investing at Dragonfly. What does that mean? What does your day to day look like? What do you actually do? Just that kill houseplants and steal merch?
Yeah. This is a big. That's a big
Now
part
the
of it.
merch has been stolen.
Yeah.
It's evolving.
I mean, it's been our money coming back to us in the form of clothing, which is kind of what we do here at Dragonfly Capital. But no, I was actually just chatting with Ledger before this about venture in the space, where a very sort of different style of investing than I think most people are familiar with, where we're closed-ended fund, so people give us money and we invest it and sort of have a target return date in mind. But other than that, we're backing really early stage companies and early stage teams and sort of seeing them out to the completion of the company or the completion of the project, or whenever there's liquidity, maybe 5-6 years down the road. So for us, really, I think when people think about Dragonfly in terms of like investing, sort of two things. One is obviously the sort of like East-West focus. So we have about half the team in Asia. So I'm currently in Taipei, but we have a lot of the team in Singapore, a lot of the team in China, and we have about half the team in the States. And so for us, I think maybe Steve gave this spiel and I kind of learned the spiel from him, but I'll just give it again anyway, which is like, if you look at crypto, it's very different from like Web 2, where you can't just like launch a crypto company and like have it only serve like the San Francisco Bay Area or California or the United States. Well, to an extent, it's really about as soon as you launch, you're global from day one. And you think about where kind of the nexuses of crypto activity, it's really Asia, where you still have the largest exchange volume, you have a lot of the enterprise value. If you look at the IP addresses of people like using DeFi products, a lot of it is coming from Asia. Like DYDX posted that stat that was like 90% of their signups are coming from China. And then I think when you look at a lot of the core tech that's being developed, a lot of the great teams that are working on new products, a lot of that's still coming out of the West, sort of like North America and Europe. And so for us, we sort of help bridge these two worlds, where we help teams that are thinking about Asia and thinking about going to market Asia, sort of help them bridge that gap, and vice versa. So that's a large part of what people sort of know Dragonfly for. But I think the other thing is just like this very sort of technical and sort of operator focus, where it's like everyone on the team has a technical background for the most part. We all worked in the industry before and some sort of operational capacity. And so we like to find teams and find products that are cool and like help them take it to market and help them build something, because that's what we've done before and that's what we like to do.
Obviously, y'all work remotely and collaborate remotely because you got people everywhere. How important is it physically being somewhere in order to like kind of catch a team when they're early, or like they're developing some crypto stuff, or just find talent and they haven't even created the project and you kind of spur them along? Like, is it really important from like getting to the right conferences or meetups, or is it just pure proximity but it stays online?
Yeah. I think early in your career, it's really great to go to conferences and hackathons and meetups and stuff like that. And I sort of did that whole circuit when I was at 0x, trying to get people to build on 0x and meeting teams and stuff like that. But I think 2020 really changed like the venture landscape, just in terms of deals are super fast now. People are okay doing remote funding. Like, it feels weird to say now, but in 2019, it was hard to raise a large venture round remotely. Like, the deal used to be everybody would fly out to the Bay Area and go, up and down the peninsula, meeting all the VCs, pitching them in person. When I started Dragonfly, we were doing in-person pitches, and that's just not a thing anymore. People aren't, flying out to physical locations to go and raise funding. They're just doing it virtually. And so, it sort of dovetails with all the stuff that we talk about around, NFTs and identity and DAOs and Web3. It's like, like people are living online and investing is going online. And so I think like, your reputation sort of precedes yourself online. People look at, what are you talking about? What are you doing? Like all that kind of stuff sort of feeds into finding great teams and having people sort of, know who you are. So it's a very different, I think, system than it was even 2 years ago, which is kind of crazy to think about.
And then I spoke to Jason from Telegram. I don't know if you know him, but don't dox his real name, because people that listen to this only know him as Jason from Telegram. And he said, you should talk to Tom. He's by far the best person at Dragonfly. So like, what is your actual job? That's actually what he said.
No,
he was like, you should definitely talk to Tom.
Yeah.
Look, we don't do much effort for this podcast, so I just ask other guests, who should the next guest be? We're going to ask you after this.
That's great. That's great. I'm happy to help. The life of a VC is a strange one. And it took me a long time to sort of get used to it. I used to shadow Haseeb and other folks around and like figure out what you're supposed to do all day. But the reality is very freeform. Like, you can choose your time. You spend your time how you want to spend your time. It's very sort of focused on output. Like, what are you doing for the fund? Are you doing deals that are doing well? And so for me, like, my day to day is, I don't know, maybe 20% deal calls. So, I'll get connected to a team. I think the data is interesting. We'll get on a 30-minute to hour call and just sort of ask them questions about themselves, the idea, talk about fundraising, just, like I want to know who you are and what you're working on and why you're working on it, and sort of see how you've thought about it and try out the product, all that kind of good stuff. Maybe another 25% is doing portfolio support. So teams that we've already invested in, like, getting on calls with them and helping them around, product, helping them around design, go to market, hiring. We just brought on the former head of talent from 0x, Zach Skelly, who's helping team think about, how to hire in this market, which is a very aggressive talent market. And so we sort of help all our portfolio companies with that. Maybe another, 30% just sort of doing basic research, like reading the news, looking at data, probably stuff that, you guys are doing, reading Twitter. A lot of stuff is just happening on Twitter. And so being, keeping abreast of what's going on is there. And then it sounds very boring, but that's kind of what it is. It's like, staying on top of what's going on and finding teams that are working on, great products and backing them. So,
and how much of your, experience doing product, I guess I was going to say like legacy companies, but they're just companies, aren't they? Just, like Instagram, for example. And then how much of your experience doing product at 0x have helped you in your role as a VC? Like, do you find you like lean on nothing from Instagram, or is it like, is it still like transferable, I guess?
It was, that was a big learning curve. I think going from IG to 0x was like, a lot of it is adaptable. And a lot of it, I think, also is sort of teaching crypto some basic product practices that I think Silicon Valley has really honed, that like crypto is still kind of catching up on. Like, I remember, one of the very first things I did when I was doing 0x was have them build out like a data pipeline. Like, they didn't have any data. There was like one website, and I was like, okay, like, what are we tracking? What are our KPIs? Like, what does retention look like? How are we tracking like on volume? Just like all the kind of basic stuff that, like, of course, any good PM at any of these big, tech companies can recite to you. Like, I don't get the sense that most crypto projects think that deeply about. Some do, and you can really tell, but a lot just don't. And so, those kinds of things carry over. But I think there's also just stuff that isn't going to translate, right? Like, the idea of having like a pure conversion funnel. It's like, well, you're often going to have people signing up, right? It's like they're like anonymous Ethereum addresses that show up and use your product. You can't reach out to them and like do user interviews and sort of all the traditional, Silicon Valley kind of product stuff that you get used to. And so you have to get creative when you think about growth and when you think about solving user problems. It's a very different type of person that you're building for. And I think also just like obviously the entire like token aspect changes how you think about product, which is something I didn't appreciate for a while. Whereas previously it was like, well, you build something and the token's kind of like a little bonus. I think what we've seen in the past, maybe year and a half is that like the token can almost be sort of the engine that propels the growth into something even bigger and better. So it's like even the same product but with different tokenomics can have totally different outcomes. And so I think teams are increasingly thinking deeply about that. And that's an area where I think obviously there's nothing really in sort of Silicon Valley product experience that's going to prep you for something like that. So I think a lot of teams that we talk to do sort of value that, and obviously depends if you're doing something consumery or if you're doing something more developer focused or whatever. It really depends on the team.
That makes sense. I like the thing you said about tokens being a growth mechanic, because I think that has happened quite a lot, almost to the point where everything that launches now, even if a token doesn't really make sense in the project, has to really do a token now. Like, it went from being like, are you going to do one, to being like, well, you have to, because if not, someone's going to fork your code base, they're going to add a token, and then they're going to grow 10 times faster than you. So even just a defensive token is required for basically any project launching. And I do think it's true that the tokenomics of a project can impact the growth of a project, because people see tokens as if the chart goes up, then it's like a sign of trust in a project, right? Like, this project seems to be doing well, I can trust it, I can use that. And the large market cap projects are seen as the ones that I can use that. And it's like an advertising tool and a community building tool, I guess. How have you seen like new projects that you invest in, or maybe you wanted to invest in, use tokenomics effectively to basically boost K Factor within their audience or community or whatever?
Yeah. I mean, I think the big thing that we look for is like are you subsidizing the right thing? There's like vanity metrics that you can juice with numbers, but ultimately it's like, if you're spending your money juicing something that doesn't actually impact protocol success, then like it doesn't matter, right? The whole point is you're supposed to be subsidizing growth and sort of simulating what something looks like at scale when it's not at scale, so that when you are at scale, like everything's just going to work. You slowly wean off the incentives. And so, looking for teams that do something like that, or, sort of the alternative, I think we've seen is teams that, I don't know if this is intentional or not, but basically, use the token almost to,
to rug.
No.
That was amazing. Use the token to rug.
Hey!
Sorry, I warned you this would happen. I warned you, but I was telling Ledger before the call, like Google Meet sometimes fucks up. So sorry.
No, it's okay.
I can't remember what I was talking.
Use the token
Basically, yeah,
too.
like it's sort of like a fake.
Use the token to disappear with the money.
It's like a fake it till you make it, right? Like if the token does well, suddenly you have this massive treasury that you can use to actually build a great product. And I would argue that's actually kind of what's happening with like Chainlink and Axie, where it's like Chainlink 2 years ago was not a great product. It was like a very, very naive implementation of what an Oracle is supposed to be. The token didn't really make sense. It was like, okay, whatever. It's an Oracle, fine. But it's just sort of memed itself into this status where now it's like, yeah, everyone's just like using Chainlink by default. And now there's this massive treasury and they've hired all these great engineers and researchers, and they're actually doing really novel, kind of like breakthrough work in cryptography and in Oracle design. And so it's like, with enough money, you can sort of make something great. And I think Axie is kind of in a similar boat where it's like, Axie Infinity is not a great game. I'm sorry. Like they're a great team. Like the community's great. I think it's a really obviously like novel mechanism, but the game's not good. But now they have like several $1 billion. I think with several $1 billion, you could probably make an amazing game. And I think that is sort of like the thing that you can do with tokens, where you can sort of help the thing grow, and then eventually sort of like backfill yourself with something great that is going to be more sustainable and longer lasting. So that's one thing that I think is like pretty interesting around tokenomics, that I think we're seeing, as well as sort of the sort of classic like hyper-reflexive, hyper-recursive sort of self-referential tokenomics that we sort of saw in like the early DeFi cycle. But I'm still like a kind of a fan of the really vanilla stuff, where it's like you build a really simple product that has organic growth, that's sticky, that people really like, and then when you add a token on top of that, like you're really turbocharging growth. Like the problem with a lot of these product spaces is sort of what we call the classic like leaky bucket problem, where if you don't build a product that is retentive, and sort of your retention chart eventually goes to zero, it doesn't matter how many people you put in the top of the funnel, because eventually they're all going to leave. And so if you have something that's retentive, you can keep adding new people in and they're going to stick around and your AM is going to go up. But if you don't build something that people actually want to use, they're just going to go away when the incentives run out. And so when you don't have the token turned on, you can sort of test check that and make sure that that's actually what's happening. And then you turn the token on and like it can just kind of go crazy. So in my mind, that's kind of what a great token looks like. But every project's going to take a different path there.
That is actually a very good point. So in the current, what you're saying is in the current crypto markets, there can be a lot of products that are not working, but are basically paying users to use them. There's a token incentive. They pay for TVL, they pay for users, they pay for volume or whatever. And as soon as those incentives disappear, the users are going to disappear, and therefore the implied token valuation may also collapse, because it's sort of circular, right? Where they're paying for people, so they've got volume, which justifies the valuation, and blah, blah, blah. But as a retail investor, me and Ledger, retail investors, as us unsophisticated morons, how are we able to tell which are the projects that have found product market fit and do have, a healthy long-term retention chart and like maybe would be working, like an OpenSea, I guess. They don't have a token. Maybe people are speculating that they will, but they clearly have good retention, and they're winning as a product, versus things that are just currently paying to inflate their valuations, and potentially enrich the team and early investors, professional investors such as you.
Right. Someone actually did a really good analysis on Twitter the other day, basically looking at basically the cost per like AUM or the like cost per like unit of revenue for a bunch of different lending protocols. When Compound's giving out Comp or Aave is giving out Aave, like what is the actual incremental revenue that they're generating in return? And I think when you look at all the lending protocols, a lot of them are actually like negative yielding, right? Where it's like they're paying $5 to get $2 in revenue, and obviously that's not sustainable. Maybe to your point around like what does a retail investor do? I do think I'm obviously biased, but like some of this like basic diligence, just like do they have a data dashboard? Like what do the numbers actually look like? Do they have a nice long tail of users, or is it like two people dumping a bunch of money in and just like farming the shit out of this token? Like AUM can be very or TVL can be very like a very misleading metrics. Same thing, like people quote TVL in dollar sign or dollar terms, but like if the asset itself is not going up denominated in itself, then of course it can be very misleading, right? Like I stick a bunch of Sol in like a lending protocol, and then Solana goes up 5x, and people are like, oh, TVL is gone up 5x. Well, it's like, yeah, but it's not like more people are using the protocol. It's just like the price of the asset has gone up. And so it's like those kinds of things you kind of want to, sniff out before I think you take the plunge. But I think the whole industry is still so nascent. People are still trying to figure it out.
Yeah, that makes a lot of sense. So you got to do some due diligence, but I don't think the listeners are going to be happy about that.
Yeah, sorry.
People keep talking about this due diligence.
Yeah.
Cobie, the chat is surprised by groggy Ledger and sober Cobie and the impact that has on the show.
Look, it's sober October.
Ooh, I like that. It's good alongside Uptober, so you can focus. So, Tom, are there like some baseline things where you think that certain token functionality is valuable out of the gate? Like, I've heard some people warn against like opening up governance too soon, or opening up revenue model share stuff too soon, and various things that you can do with a token. Do you prefer seeing people make the token relatively useless up front, alongside like when to launch, which you already talked about some?
I really do, actually. I mean, I think tokens are really great for progressive decentralization, where if you're doing something that is maybe a little bit in a gray area from a regulatory perspective, having a token, having a path of decentralization can allow you to do things that a team that doesn't have that path just simply can't do. I think if anything, I see a lot of teams using tokens in ways that I just don't like. So like proprietary payment tokens, that was a huge thing in 2017 that I think turned out to be a really bad idea, where it's like people want to denominate fees and assets in a very common currency like dollars. They don't want to denominate it in your random token. Things like you using your own token recursively as collateral, like obviously they're just like pure reflexivity and convexity, right? Like looks really good when the market's going well, and then just like absolutely obliterates you on the way down. I think I'm trying to think, there was like one other like token model that I've seen that I just like really dislike. But yeah, I mean, I think for the most part, it's like start with something super minimal. It also just allows you to get it out faster, and then back into it over time. And I think I chat with the Paradigm folks pretty frequently, and I think Dan Robinson is in this bucket too, where it's like, don't overcomplicate your protocol, don't overcomplicate your tokenomics. Just do something really simple, and you can evolve into something better over time. I think that tends to be sort of the best path.
How do you put that on a pitch deck though? Like,
yeah,
token released, functionality none.
Like so many teams that we back, is like the whole valueless governance token meme. It is kind of true. Like a lot of teams that we back, they don't have a token plan, or there's no plan to do a token, and we're not buying tokens, we're buying equity, and we're like, yeah, if you want to do a token at some point, great, like we'll take the token. I think DYDX for the longest time, was talking about never issuing a token, and then no token plans. And then finally, when the time was right, they launched their token, and obviously it's done quite well. But for us, really, it's like, can you build something that is retentive, that is solving a problem that people actually want and need? And if you can do that, I think the market will reward you, independent of how you sort of it's like if you have amazing high quality beef, you don't have to do much to it, right? Like you put a little salt on it, a little pepper on it, like that's it. You don't need to like fuck with the presentation too much. I think it's really when you don't have anything good and you're sort of like building on shit, Then you have to like get really fancy with tokenomics, and you have to get really really fancy around a lot of the weird mechanics of the product when you don't have anything sort of substantial underneath the hood. And so really, it's like if you have something clean and material, you don't actually need a lot of the, I think, really fancy ways that people try to get complicated with their tokenomics, because the product sort of speaks for itself.
What are some examples of like the best that you've seen? So like if you were launching a product today, like how would you do the token basically? What do you think the like a Grail project would look like?
I mean, I think well, actually, I guess going back to your earlier point, Ledger, the other thing that I really dislike is teams that are doing revenue to token holders this early. Yeah. Like the whole thing, right, with early stage startups is like you're supposed to be unprofitable because you're supposed to be buying growth. Like the thing that you're spending the money on is like, capital improvements, right? It's like the value of the company goes up, not like giving it back to shareholders. That's what you do when you don't know what else to do with the money. Ideally, you should know what to do with the money because you should be using it to like make your product better and grow it. And so really, really just like when teams do that. And I think frankly, a lot of these treasures are probably just like too big and they actually don't know what they're supposed to do. I think like, beyond that, I don't know. I think, one thing I have liked seeing teams doing more and more is like using the token as sort of like a liquidity backstop. So I think like, Maker sort of pioneered this back in the day where the token serves a very clean purpose, right? It's you get revenue in practice, but probably going back to the protocol, but it also serves as a token backstop, right? You have risk and you have reward. A lot of projects, they give you a lot of reward, but token holders that don't actually take on any risk. And so it sort of, it sort of questions like why the token has to be there if it just sort of exists to, suck up all the value that's being created if they're not actually contributing anything back to the ecosystem or to the protocol. And so I think when I think about, what does a great token look like beyond sort of the, valueless, decentralized governance token meme, which I think is real, it should be sort of thinking about that, which is like, why do token holders deserve anything? What value are they actually contributing back into the ecosystem in order to sort of, justify taking some sort of fee or getting some sort of reward? And so teams that sort of implement something like that, I think tend to, in my mind, look the best versus just sort of a rake on the entire product.
What does it mean for it to be a backstop? I'm not following. In terms of the Maker.
Yeah. So for Maker, right, in the event of system debt or in the event of bad liquidations, more Maker is minted and sold in the market to sort of shore up any debt of the system. And so Maker holders basically take on that dilution risk. Where if they do a bad job choosing collateral or setting rates and there's bad liquidations or whatever, Maker shareholders Maker token holders are diluted. I think if you have a system that just where the token holders just get pure revenue and there's no sort of risk to them in the event that like the system does poorly, I think there is an open question as like why should they actually get that revenue? Like why do they deserve that if they aren't actually taking on any risk? Every equity holder, for example, in any company also takes on risk for in the same sort of model. I don't think token holders are really isolated in that regard.
So when there's equity deals, that's what you're doing. Eventually, you want to see positive returns beyond the token. You want to see the value of a company go up. You want to see maybe an exit or acquisition, or eventually they may achieve revenue that's profitable. In the Web 2 landscape, it took Facebook forever to get to that point, but eventually they became very, very, very profitable. Do you see a similar path where after 10, 15 years of this, we start to see really profitable crypto companies that have this kind of hybrid token model plus equity model that all of it can work? Yeah,
I mean, I think it really depends on the company, but when we're talking about equity, it's really almost more of as a sort of a vehicle to get tokens in the event that if there is a token issuance. So, equity investments are very well understood. They have good investor protections. They're pretty vanilla. You don't have to commit to doing a token or commit to doing a token model up front, which is great. But in the event that there is a token issuance, making sure that equity shareholders don't get screwed. This happened with some exchanges sort of back from 2016, 2017, where there are a lot of equity investors who own shares in some of these large exchanges, but they didn't get tokens. They don't have token rights. So it can be problematic if you own equity in an exchange that is giving away a large chunk of their revenue to token holders, but you don't own any tokens. And so you're sort of like sitting in the worst of both worlds, where you have ownership in this illiquid exchange, right? Because it's not going public anytime soon. maybe you can trade secondaries, but maybe not in size. But you also don't own tokens, which are like getting a lot of the cash flows. And so I think when we think about doing investments, we are a pure venture fund. We do pure equity investments. We invest in sort of CFI companies like consumer finance applications or lending desks or exchanges or whatever. We also invest in DeFi projects, sort of pre-product, pre-token. We'll invest in them in sort of an equity, but it's almost more of a shell company in the sense that it exists to help the company incorporate, help them set up a bank account, help them manage finances. But ideally, not ideally, but at some point if they issue a token, making sure that shareholders are getting their sort of pro rata share of that token. So I think like that is sort of the answer on liquidity. Now to your point, like what does that actually look like 10 years down the road? I do think that a lot of these things are going to look like a mature company at scale where you have sort of dedicated full-time team probably being paid through the DAO. Maker has already actually made this gap where now all Maker employees, instead of getting employed through the Maker Foundation, they get paid through the DAO directly. I think more and more teams are going to go down that route. You're going to have full governance proposals. You're going to have activist shareholders. Like it's going to look like how we think tech companies and sort of public companies look today. But it's all going to be sort of decentralized on chain. It's very sort of transparent manner that we've all become accustomed to.
Speaking of tokenomics, there's been a bunch of airdrop related drama this week.
Yes.
Thanks to Ribbon and Did Vot or whatever. I don't remember what they're called.
Ribbon hat right here.
I got a ribbon hat.
Divergence. Yeah.
Yeah. So for anyone that doesn't know, is it divergence or divergent with a T or a CE?
I think it's divergence.
All right. We'll call them divergence. We might be wrong. But anyone that didn't see, Divergence, Sybil attacked the Ribbon Finance airdrop and like somehow farmed like 10% of the circulating supply or something. Dumped it all for ETH very quickly, or dumped the majority of. There was a Docs wallet that was connected to an ENS that dumped a lot of it for ETH, and then in the end gave like everything back. So they gave the ETH to the DAO, they gave all the Ribbon that they'd farmed in non-connected accounts back. And I think they even gave their seed allocation from January back as well. So they're basically neutral on the project. They didn't make no profit, didn't make no financial loss, but maybe took a reputational maybe took a reputational uppercut, let's say. Now, I think I saw something, a tweet from you maybe earlier today, yesterday, that said you'd farmed a lot of Ribbon from the vaults prior to the token launch. And like out of good interest, you just basically sent everything back today. Do you want to chat a little bit about that?
Yeah, definitely. So I don't know where to start. But yeah, I mean, I think you sort of covered the whole divergence thing. I mean, I think for me, I meant to sort of talk about that a little bit. My whole thing was I've been using basically Ribbon literally since like the first day that they launched. I've known Julian quite really well, and actually sort of helped, with the idea generation. I was actually visiting him in London, and we were grabbing beers, and I was sort of just sort of showing him what I could do on my phone, and I was showing him the Matrixport app. Matrixport is another Dragonfly portfolio company, really popular in Asia. And one thing that they do, which is I found really cool, is basically they help people sell and buy structured products, like basically what Ribbon does, where you can sell covered calls, sell covered puts. It's a really popular product for mainstream consumers in Asia. It's like sort of like Robinhood for them. They'll sell these options and generate yield. And I think crypto is interesting where this is obviously a potentially somewhat risky strategy if you don't do it correctly. But what's interesting about crypto is sort of it's framed as like you win either way, right? Like it's like a dual currency yield. So normally if you sell a covered put and it expires in the money, well, like fuck, like you probably you lost money, right? Like you're basically buying this asset probably above where market price is. But in the crypto context, people denominate a lot of their wealth both like in dollars, but also in the asset that they're trying to stack, right? They're trying to like stack Bitcoin, they're trying to stack ETH. So in reality, it's like, oh, if you sold this put and it expires in the money, well, that's cool because you're just like, stacking sats, like you're accumulating Bitcoin, like it's all good. Like, we'll sort of put that over here and it's going to go up in the future. Very, very different mentality than like, selling like Apple puts, right? People aren't trying to like stack Apple shares. It's a very different sort of asset class and how people think about it. So it's a very cool product that is really well suited for crypto, in my opinion. So sort of the background on Ribbon there. All to say, so I've basically been using Ribbon since day one, been putting a lot of my own sort of personal ETH into it and using it just because I like the product. I actually think it's like a really cool, interesting yield opportunity. Been giving a bunch of feedback to like Julian and Ken on sort of how the things were going. I'm also really active in the Discord. So I think actually like most of the airdrop that I got was for being an active Discord member, which also didn't make sense to me because I'm like your lead investor. I don't think I should be getting like a Discord airdrop. It's almost like sort of by default. And so basically I saw my own ENS come up in the deposit list, and I was like, obviously I've been depositing for a while, but I also deposited after this email came out, and I was like, well, like fuck. So actually, basically after the Divergence news came out, I hit up Julian and I was like, yo, like I fucked up, like I deposited. I'm just gonna return the Ribbon if that's cool with you. And I think he obviously knows me and said it was like not a big deal, but I think it's like doing right by the community, right? Like I don't think like that's how these airdrops should be done. Even if it was by mistake, even if it was like with good intent, like that's not really how, in the interest of fairness, I just don't think that's really how this should be set up. Even with the Discord thing, it's like, I don't think like me as an individual, should be getting like a Discord airdrop if I'm like the lead investor. I just don't think that's really how these things should be done. I think, to your point around like divergence and airdrops though, like, I mean, it's really raised so many different questions, right? Like, are people going to keep doing airdrops in the future? How do you prevent like Sybil attacks on airdrops? Was this like fair play? And that was sort of the other question, was like, well, obviously it's one thing, it's pretty goofy to, farm a bunch of your portfolio companies tokens and then dump them and then say that you're long-term aligned. But it's another to say, what if you just, farmed them and you held them because you really like them? It's like, well, like, sure, maybe you could have like guessed that there was an airdrop, but you also can have that information. But then like the airdrop date was also like there's just so many sort of questions around this. And I think that's sort of what people are sort of going through right now, is this like, what are we going to do about airdrops in the future? I think I actually really like what DYDX did around sort of the trade mining, where you get this airdrop, but you don't get it for free. You basically get an allocation that you unlock by using the product. And so it mitigates some of the Sybil issues, but also sort of, makes people use the product more, which is always, I think, the criticism around the Uniswap airdrop, which was like, yeah, you just spent, hundreds of millions of dollars, granted in amazing press and, amazing goodwill for the community, but like maybe that could have been spent in a better way that maybe would have driven the product and driven the protocol, usage a little bit more, beyond just sort of giving it away for free to everybody. So I don't know, there's sort of a whole, I think, discussion right now around airdrops and like, what are we going to do about these going forward? What's going to be the best path forward? I'd love
to expand on that conversation, just because like our listeners, and I'll include myself in that. Like I did this a little bit with 1inch, another one of your portfolio companies, where I was like, okay, Uniswap just did this. I'm going to go do some crap on 1inch with a handful of wallets, and eventually got an airdrop on several of
Ledger.
them.
How could you?
I did. And then, you know what, like I held it for a little while, and then when I felt like 1inch was topping, I sold it, but that's what a typical user is going to do. I wasn't an investor. I was just someone seeking profit potential, and then if you feel like there's better whatever, the deal. And I am obviously not alone. Lots and lots and lots and lots of people are doing this across the board, and even telling people you should do this across the board, because this is how teams visualize a potential, more democratic distribution of their portfolio, of their tokens. Right. And my question is it so bad if you have this kind of more democratic, smaller airdrop, even to people who haven't used it in spades? Because the alternative seems to me is like you essentially make the rich richer. The people that use a lot of volume, or like LP, an absolute ton, or you're just giving people that don't really need the money more money, rather than kind of making these fans because you changed their life, because you airdropped them like 20% of their portfolio or something. And I wonder if there's some kind of hybrid where it's democratic, spread out, but maybe has better prevention of like the, me saying like, okay, well, I'm going to do this on 100 wallets, which I did not do. I was far too lazy. In hindsight, I should have. But you know what I'm saying? Like, what are your thoughts on that?
Yeah, I mean, I think with the ribbon thing, it was, problematic. I think it was so much like I was pure just sibling, but it's also, sibling potentially using privileged information, but it also like, selling the portfolio company asset immediately, which is sort of a bad look. But as an individual, you sort of guessing, it's like, well, maybe it was bad, but it's also kind of on the team to sort of think about how to prevent sibling and make sure you're doing a unique airdrop. And so I think sort of the designs we've seen around that are still kind of nascent. I actually really like what ArcX did with their Know Your Farmer system, and that was sort of a whole thing during DeFi summer for a bit with like the degen score and stuff, where they look at your past on-chain activity and be like, okay, has this person traded on Uniswap? Have they deposited $100 into Compound? Have they done deposited $100 into Aave? Like have they done these things? And that sort of makes you look more like a real person. And so certainly you could go out and generate 1,000 addresses that go trade on Uniswap. We have to know like what is the amount that they're looking for. It costs you money to go and do that, and so it's not as free as just like generating 1 million addresses and depositing into the protocol. So I do think like some system like that of using some sort of on-chain reputation. People have talked about using NFTs as well. I think could be like really interesting. We're basically using that as almost sort of a proxy for like identity and uniqueness, and then sort of using that to sort of back into some sort of airdrop, or potentially just doing it like the issue obviously being that if you just do it, to your point, like proportional to how much volume you're doing, how much you're contributing in terms of TVL, then you just sort of run into these problems where you get the large hedge funds of the world showing up and just farming the shit out of your token and dumping it. And that's obviously not a good outcome for the team as well. So I don't think there's really a perfectly clean problem solution here. I think teams are experimenting with different ways to get around this. But I think overall the intent, right, is like we want to fairly distribute the token. But in my mind, it's so like we should be fairly distributing it in service of growing the protocol or like making sort of the entire protocol more successful. There's certainly an element of doing a very small airdrop to say thank you or something. But I think the big airdrops that we sort of see in my mind are sort of counterproductive, or just like maybe not counterproductive, but not the best use of capital that could be spent.
The other thing that go ahead, Cobie.
My main opinion on this, like the difference between you doing it, Ledger, and the difference between Divergence doing it is like when teams do an airdrop of some kind, they know that there is area for abuse, right? They know there are vectors where people can farm multiple wallets and sell them, and in some cases that is like just a risk the team has accepted. Sometimes the team just doesn't even think about it, and it is, ever since Uniswap, has been evident that a lot of these projects are going to distribute their token in this way because it's a decent regulatory strategy to give it away free rather than selling it to people. And therefore, if and the team knows and everyone knows, then it's fair game. Like it's a system, everyone knows the rules basically. And if you want to go make 150 wallets and like farm tokens and like you manage to guess the thresholds right and stuff, then you can go do it. I remember seeing one guy made like 300 wallets for one of the airdrops and he got the threshold slightly wrong. So he made 300 useless wallets. It's like, that's a risk. You can do that. The difference is when you are an investor, especially a seed investor in a project, you have a contract between the founder and the investor that says, I'm going to do whatever I can. I'm going to give you this money and then I'm going to do whatever I can to help you make your project win. Like founders don't accept investors just for the capital. They like add people to their team, right? They would add people to the DAO or the project's backing, and they don't just expect this one-time payment from them. They want ongoing support to try and help the project be as successful as possible. And farming 10% of the circulating supply and then selling it on day one, there is no way which that is a like beneficial action for the project. Therefore, the investor has broken the contract between founder and investor. And I think that's why it's bad. Yeah, there was maybe some insider information. They added some money when they got an email saying there was going to be an airdrop, but the criteria wasn't clear. And they'd already been doing this, but like this Sybil attack anyway. So it was explicit abuse of the airdrop by someone that is contractually, maybe socially contractually obliged to try and make the project win, taking actions that just like only benefits the investor. And I think that's the difference. Like if you want to do it and you're not an investor, you're just exploiting a system which everyone knows the rules to. But I think it is different when you've already been able to buy on extremely favorable terms. You know, you've turned 25K into $10 million or something. Do you really need to dump on your own portfolio company and harm that project's success, right? Like, not only does it like make the token go down and make the project look like a scam on day one, this can happen. We can talk about it now. We're still talking about it. You've put reputation of everyone at risk. And
that was social policing essentially that worked, right? Like in the end, I feel like it did. Like Cobie and I talked about this day of, because I didn't really know what was going on. I was at soccer with my kids. He's like, "This is the biggest story of the day," and I was, I said something, and I was like, "Oh, it turns out, this isn't really on Ribbon. This was one of their investors that made some unethical actions." And I think eventually, like Twitter figured that out, people figured that out, and I think Ribbon will be fine. And the actual policing of it occurred properly, which is kind of crazy considering there was no real structure. So it's a really interesting outcome, but now what, Yeah.
No, I think you all raise good points. I think really the big thing was just sort of selling. I do think also, potentially trading or taking actions on, insider information, also a really bad look. It's, maybe not explicitly illegal yet, but I certainly think we should be, holding ourselves to that high standard if we want to like self-regulate as an industry, and independent of what that actually looks like. So, I think we'll sort of be seeing fallout from this for a bit, but I think huge props to Julian and Ken and the entire Ribbon team. Like they, I think, really handle this like pros and did a great job with communication and sort of just general sort of fallout from it. So I'm obviously still super bullish on Ribbon. I think I've been very, very public about, how much I love Ribbon and using it and everything. And so I think they have a lot of cool stuff in the pipeline.
I agree with you, by the way, on the structured products and like this idea of essentially selling puts and being assigned whatever asset you're selling puts for. If those levels hit, that's a really interesting way to just buy the dip or like dollar cost average back in and something like that. And this is one of those products that I'll probably want to use myself. And structured products are really, really big in traditional markets, like really, really big. So it's definitely, I don't want them to be like disincentivized to continue on. I have one additional question about kind of the earning airdrops side of thing, which is to date, I think we've really seen kind of you qualify once and then you don't have to do anything else to get like the full value of an airdrop. And then there's like liquidity farming type stuff that's mostly valuable to people that have a lot of money to liquidity farm with. Is there an in-between where people can kind of do a hybrid where it's more like maybe an Axie style play to earn? And it's like, here's the max potential value of your airdrop up to 1,000 things, but like you have only gotten badge number 1 by, interacting with our protocol one time. Here's how the path towards like full achievement of this.
That was basically what DYDX did, wasn't it?
But they unlocked it all at once, right? Like it wasn't a continuation.
No, you had like loads of actions.
Yeah. It was like the problem with like doing pure trade mining, right, is sort of like Fcoin, if you remember this back in the day, which was like this Chinese exchange. And basically they had the system where they just they were basically paying you to trade. So the coin subsidy was so much higher than the actual fees that you were just getting people to wash trade. And so if you don't dial in the like token pricing correctly, like you sort of get that pure sort of like wash trading phenomenon, which actually obviously isn't helpful. With DYDX, you get this bounty. It's allocated for you to your point, Ledger. It's like, hey, you used this in the past. Cool. You can earn up to 1,000 or 10,000 or 100,000 tokens. But to do that, you need to hit these trading milestones. And so it sort of encourages usage of the product, but you don't just sort of get it for free. I think that sort of like per address sort of like usage capping, I think is pretty smart. Like I mentioned this earlier, but Archex has also been doing this as well, where it's like, you can deposit up to $2 million per address in our lending protocol, and the address sort of gets gated by if you've used different types of DeFi products in the past. So for every address that is traded $1,000 on Uniswap, you can deposit, $1 million or $2 million or something like that. And so it's sort of pseudo Sybil resistant, where it's like most people don't have a zillion addresses like that lying around, especially after some certain date threshold. But it also sort of scales up usage, where not everybody gets the same airdrop. You have to sort of help the protocol grow in order to actually get access to that. So it's a really interesting design space. I don't think anyone's really nailed it yet, but I'm curious to see where folks take it.
Part of me thinks these issues are going to help evolve that system to, in the end, be better.
Totally. I don't know if crypto people are ever going to go, are ever going to find a full KYC system palatable. The idea that every address on chain is going to be fully doxed somewhere doesn't really seem like a likelihood. But I think some sort of pseudo KYC system, or I've seen teams working on probabilistic KYC or a semi-private version of that, seems like kind of the way forward, where you get a lot of the properties of having some sort of real identity, but not in a way that it sort of violates your privacy or violates your ability to use these projects.
I'd love to know what would happen if Feds just did FedCoin airdrop, and depending on how much gas you've spent, they just give you 10x in dollars.
Yeah,
I wonder how many people sign up and go, fuck it, yeah, go on then. I'll claim that. Why not? Yeah.
People do crazy shit for airdrops. It's fuck it, free money. Why not? I 100% would.
I mean, I'm most certain they would. It's probably significantly cheaper too on a per user basis, in order to relative to enforcement dollars that you may spend.
Yeah, opt in.
Yeah. All right, let's move on before Ledger starts talking about tax. There was an opening for him. We're not letting him have it.
Close it out.
So you said you hung out with Julian, and you were talking about these kind of products when you went to meet him in London. What are the sort of trends you're looking at now for the next sort of 6 months? What are we going to be talking about in 6 months? Someone's rugged an airdrop and you were buying it now. What is it? What are the narratives you're interested in now, and how do you think the next sort of 18 months are going to look?
I mean, I'm still very bullish on structured products. I'm actually writing a blog post right now for Dragonfly research on sort of how this whole space is evolving. Another Dragonfly portco in this same space is Lemma. I think it's lemma.money or lemma.finance. I can't remember. But basically what they're doing is sort of a tokenized version of the cash and carry trade. So basically, hold ETH spot, short ETH perps, and you basically just collect the funding rate in a delta neutral way. And so, with this, you can earn 40, 50% a year just on funding rate. So it's super common, super popular for past few years on Bitcoin perps exchanges, but they're doing it in DeFi. So they're shorting DeFi perps, which obviously are now a thing. They were not a thing 6 months ago. And then sort of managing this all for you, but with the sort of broader vision of moving out of sort of this sort of yield generating perp stablecoin into basically a DeFi prime brokerage. So we will cross margin you across all the different derivatives platforms out there that are going to be somewhat fragmented when you think about all the sort of L2s and different types of chains that these things are going to be built on, and eventually extend your credit as well, right? I can see that you have a position worth this amount of money on DYDX, and you want to open a position on perp or DerivatiX that has this kind of shape to it. Cool. We can just sort of grant you that credit immediately, because we know that you have this other asset that we're holding on to you for holding on to for you on DYDX. And so I think that seems like a very obvious next step. If you look at how crypto or how DeFi sort of evolved, it's gone from people building sort of these individual protocols to some sort of aggregation layer, as you sort of saw with spot dexes. This is sort of the same concept, but just applying it to perpetuals, which takes sort of a different architecture and different approach. So
that sounds cool. Ledger, this sounds like something you'd like. Cash and carry, 40% APY. That sounds like straight up in Boomerville.
I was highlighting it on the stream, ooh, 48%. This looks nice. Sorry. I actually saw this mentioned for the first time earlier today, so I'm assuming this is a VC cabal move to get Lemma in the spotlight.
Is that true?
I saw Kyle respond to somebody that was when when decentralized perps aggregators, and Kyle was like, you mean Lemma? And now Tom's like, you mean Lemma? I'm just saying, there's a secret chat somewhere.
Look,
VC
get the
hive
wallets
mind.
going. Let's get the wallets going. If you're in chat, 200 wallets, let's go. We'll be millionaires.
Yeah, Shooter Crypto McGavern highlighted a chat. We really want to see it. So you heard it here, boys. Next huge airdrop is, he said lemon, so he's not going to make it. Sorry, Shooter.
So yeah, going back to food coins, the little 2020 throwback. I could go for that. So yeah, I think structured products, I'm going to keep seeing more of that. I think derivatives overall, like, it's still so early, which is kind of crazy to think about. Like, DYDX just launched, Purpose is about to launch a V2, DerivateX has not come out yet. Like, I think it's going to blow up sort of the same way we saw, spot DEXs blow up like a year ago. So pretty excited for that. I think like DAO tooling is still kind of growing. Like, we're seeing that where people are still using a lot of the same old tools we were using 2 years ago when it comes to managing DAO treasuries. Like, if the nodes is safe with like 6 people on it. Surely there's like something better out there now that like we actually have real money at risk, which was not the case 2 years ago. DAOs are doing things that are very complex, which is also not the case 2 years ago. And so like, I think when I think about where that space is going, the software that's going to be built is going to look, much more like a Workday or like a Bloomberg, but for DAOs that exist today that are managing financial, complex financial applications and the things that go along with that. So like one of the things that's coming out of this Ribbon situation is now they have a bunch of ETH in the DAO, and there's a vote right now of like, what should we do with it? And should we, use it to buy back RBN? Should we like LP Uniswap with it so we can own some, like the treasury can own some liquidity shares? Like, really interesting question. I think treasury management is really unsolved in that whole DAO space, where people right now just have their entire treasury in their own token, which again has this sort of huge convexity problem to it, where when the market goes down, when you really need the money, like you don't have the money. And so that whole space, I'm seeing a lot of teams sort of start to build and start to grow. But I think that will be like really hot, for the next year or so. Again, it's sort of like providing the tooling, providing the platform for DAOs, which are also just increasingly becoming more important, not even just in the DeFi space, but obviously for NFTs. We're seeing stuff like, Party Bid, right? Like, building sort of just-in-time DAOs to bid on and fractionalized NFTs, or even like, NFT managed DAOs. So like, hey, if we all own this NFT, we should also have a treasury together to sort of help, promote it, to help do cool stuff with the IP, to help, build things on top of it. So instead of individual token holders, sort of voting pro rata, it's all the different NFT holders sort of voting on how to allocate treasury funds. So I think DAOs are extremely popular. or extremely powerful. I'm not going to like do a whole like Web3 spiel, but I think like the actual tooling that powers them is still like really kind of immature, and I think it deserves a lot more attention and a lot more love than what it currently has.
DAO infrastructure is very immature. Do you remember not long ago, maybe a couple of months ago, when there was that big Uniswap proposal and people were voting yes and it was voting no because the no button said yes or something? You clicked yes and it actually voted no in the background, and someone was like, I'm confused about this. That's how early it is, mate.
I think Uniswap's a great example. Right? They have so much money, but I think most people, the critique would give, hey, like they're not spending as effectively. And so like, it's almost like the reverse problem of 2017, 2018, where it's like, now there's like almost too much money and people don't know how to spend it effectively. So they just give out like random liquidity mining programs or random airdrops. And I think, it can seem fine at first and you feel like you're doing something, but ultimately, you do want to be strategic and thoughtful about how you're spending your very limited, resources on these protocols.
I'm now picturing Hayden as like that guy in front of the fire, wiping his tears with his dollar bills. Just with his treasury, Uniswap treasury dollars.
I guess
EOS got creative with the treasury. They've treasury hopped it a few times, and now they're launching an exchange and investing it in their exchange or something. Very clever.
That's right. Yeah, I mean, maybe a good example, right? Like, they actually maybe a good counterexample that they have like tons of money, have never even really bothered to build the core product, but it doesn't matter because they have good treasury management, and so they can just sort of keep going and keep trying new stuff out. So. That's the lesson.
Another issue I've seen with governance is essentially like puppet governance from a decentralization perspective. So I saw this one yesterday where some of this project was like 100% of participants have voted that we should put our ETH to use from the treasury and do something with it. Or like, people are begging community users, like community token holders, to stake their stuff and vote with it to participate in governance. And I've seen arguments for like why you should actually force that, or there's some kind of penalty. Do you have any ideas for how to incentivize governance? Do you think it's the right path, and what could be done there?
I mean, I think like in reality, probably what will end up happening is just more continued delegation. That's like what happens in traditional corporate governance. I don't think it makes sense to have pure direct democracy and sort of force people who have full-time jobs and aren't really paying attention to sort of blindly vote on very complex topics. And so I think what we're seeing is the build out of more delegation systems. We're seeing VC funds bring on full-time basically protocol managers. So like Andreessen just hired Alex Kroger. We actually just hired a researcher who's going to be focused on protocol governance for us. And I think like that's part of where your value add comes in as a VC is like, can you actually help steer this thing that you own some material percentage of? Can you actually propose improvements to the protocol, or are you just going to like rubber stamp everything? And I think like I don't think it makes sense to have every single person vote on every single protocol, and instead have experts and have them be sort of fluidly delegated to as token holders see fit. Obviously, the issue there is still around concentration, which I think has been some of the flack that someone like Andreessen has gotten around holding a large amount of tokens and then delegating to university clubs. But I think that that's almost more of a function of the fundraising system, not so much of the governance system per se.
Yeah, I do like the delegation idea, because I can say, look, you're going to make smarter decisions than me. It's kind of like the Republic version of governance. And what I don't like about it is, like you said, if everybody delegates to one, it's highly decent. It's not decentralized at all. It's highly centralized from a decision-making perspective. I wonder if maybe you can do some kind of like max delegation rule set or something, so that nobody has more than 10% of a vote or whatever. But it seems like there's definitely some challenges with delegation if everybody delegates to the same groups. But overall, I like that, because I'm not paying attention to these protocols, but I do want to earn the rewards or whatever that you get from delegating. Yeah.
I also like what Gauntlet actually is Gauntlet's doing around automated governance. So they've just received grants from Compound, and I believe Aave is coming up to basically automate the proposals and automate a lot of the sort of smaller variables that are being tweaked in these governance proposals. So instead of saying, hey, like we think we want to move the collateralization ratio for this asset to X from Y, or we want to set the interest rate from A to B, it's like, well, let's just like delegate that entire system to a operator, and then this sort of agent system will actually go out and make those changes on governance behalf. So it's like, which also kind of makes sense, right? Like in corporate governance, you would not say, hey, let's like adjust the price of our sandwiches by like 5 cents today, or like let's go tweak the type of loan that we're getting. It's like, no, let's go like hire somebody who's a financial planner, like our CFO, and they're going to go out and actually like manage all this for us. And so in some ways it's a bit similar, where it's like it's delegation of the function as opposed to delegation of the actual governance process.
Like that.
I'd love to chat a little bit about how you see like the scaling wars, I guess. So how you see the future of Ethereum. Is it going to be everything on Arbitrum or Optimism? Are we going to wait till Meta Labs ships ZK Sync or ZK Porter or whatever they're calling it? They rename it every week, don't they? Just a new name now. Can't keep up. It's always got ZK in it, which is the bad bit. Like if it was called Sync, that's cool. If it was called Porter, that's also cool. But the ZK bit makes it shit.
Cobie will receive your branding invoice to what's your ENS? Send him 100 ETH for that quick idea. Just get rid of the ZK part.
Yeah, I'm the new Justin Timberlake in the Matrix, in the Matrix, in the Facebook movie. But do you think, is everything going to move onto a layer 2, or is the like bridging experience of jumping over to like Solana or to Avalanche or like whatever the new trendy chain is? Apparently it's now secret. Is that, I don't know if that's even a layer 1. Yeah. Secret, everyone's saying
it's a layer 1.
The best shill ever, because you can just say, oh, I can't tell you, it's a secret, and then you're shilling at the same time. I don't own No Secret, but I see everyone just made like 10x on it in a day or something. So I'm salty about Secret. Don't know what it does. But yeah, how do you see that playing out? Like, which way is it going to go?
Yeah, I mean, I think I probably like Steve and probably like some other folks at Dragonfly, and sort of a mini ZK rollup maximalist, where I think really the issue is sort of around the developer ergonomics of building on a ZK rollup right now, where you have to develop in some sort of proprietary circuit construction language. They don't have sort of full EVM or WASM compatibility, but those are very rapidly coming. I think StarkNet just announced that they're doing like their alpha in the next month or so, and they're working on was it like Warp or something like that? It's gonna do like EVM to Cairo transpiling. So it's like we're getting there, right? It's not an unsolvable problem like the scaling trilemma. It's just like, okay, how do we make it easier for developers to actually like deploy their code on a ZK rollup? And I think we've shown that over time we've designed ways to make it easier for developers to build, right? Like JavaScript, like one of the shittiest languages of all time, but it sort of built this like moat around it, and now we're like, oh well, now we know how to build like actually really nice languages like TypeScript or whatever, and we know how to build great developer environments that allow you to actually compile down to JavaScript. Doesn't actually matter, but you can have a great developer experience even on top of something that's not great. And so I think that's probably the path that we'll see with sort of that L2 in my opinion. I do think there's still a question around like, is there going to be room for sort of specialized blockchains, right? Like that's sort of the argument that someone would make around Flow, where it's like, well, is Flow really the best at one particular element? Probably not. But does it really matter? Well, also maybe not, right? Because they have this entire moat around the entire like Dapper Labs brand and all the IP that they're working with. And so it's like, well, maybe for them they don't actually need all the security and like performance and improvements of a ZK rollup, because it's still going to be more expensive than just like rolling your own POS chain. So it's like, I think that's sort of what we saw with like the BSC and Polygon rise over the past year, I guess, over the winter, where it's like, yeah, I think for some applications, for some purpose, even something like a ZK rollup isn't going to get cheap enough. And I think that's kind of where something like a Solana or some of these other competitive L1s make sense, where it's like, even maybe at peak performance, these things aren't going to be cheap enough to support the cheapest of NFTs and transactions that people want to support. And so maybe there will be room for these sort of like specialized blockchains that actually like are designed for sort of this like super dirt cheap data storage, throughput type stuff that will almost, maybe never hit the correct scale that an L2 will need to support in terms of the cost.
What about L3? Can't we roll up a roll up like Russian dolls of scaling?
You can actually. So like that's what Mina is doing, is they're doing recursive snarks, right? So it's like a proof of a proof. And so it's like, yeah, you can go deeper and deeper and deeper. And I think maybe we'll get there someday. But I think it's still a bit ways out in terms of like getting that to be performance ready and have that be like a great developer experience too.
This is what the movie Inception was about. It was a warning. Don't go too many roll-ups deep, because then you're stuck there forever.
Yeah.
Why does something like Flow need to be a blockchain and not a database? Because it seems highly centralized right now.
That is a very good question. I think there's aspirations to decentralize this stuff over time, and I think that's sort of what we've seen with a lot of these projects, where it's like, yeah, to start, there's maybe the core team is running a lot of the nodes, and maybe it's not that decentralized, but over time, by building it as a blockchain, you leave the room open to actually go out and make this thing potentially decentralized. Whereas if you actually build it as a pure database, there's never that potential path forward. And so I actually don't know what the Dapper Labs team is thinking, but I have to imagine they have that aspiration. I know there are a couple of teams building on Flow because they want to sort of get access to the Dapper ecosystem. But if you never sort of make that shot, then you're always going to be stuck in database mode. But you're right that maybe at the moment it could just be a database and sort of you might be wanting to save yourself the trouble.
And aren't there some like whole ecosystems that's what they do? Is that where Cosmos comes in, or something where it's like you build your like kind of app specific blockchain and you get some of these elements of you can, I don't know, decentralize your individual network, but it's designed purely for like essentially one app?
Ledger,
Yeah,
I've got to say, I do love that you host a crypto podcast and you're like operating on the absolute boundaries of your knowledge. Like if you asked the question to go beyond that, you'd be like, yeah, no idea.
I mean,
that was very good. Yeah, I mean, I think Cosmos SDK is like pretty sick, right? Like it's like, yeah, you can roll your own blockchain pretty quickly, pretty inexpensively as a individual developer, and like you get a lot of nice properties with it, which previously was like not really possible. And then if you implement IBC, you also get all the cool bridge stuff, and the Cosmos bridge experience is amazing. So yeah, there's certainly an argument to be made that like, hey, maybe the specialized blockchain future that we're going to be in is going to be one of just Cosmos SDK blockchains, and everyone's going to have Disney's going to have their own Cosmos blockchain, and like Activision's going to have their own Cosmos blockchain.
Wait, they already got Dragon Chain. What do they need a Cosmos blockchain?
That's true. And they got the audio codec, the $20 million audio codec. So yeah, they're
set,
good to go. Yeah, but yeah, no, I think I do think it'll probably be a heterogeneous blockchain future. It's just kind of unclear what path it's going to take right now. But overall, as far as Ethereum stuff goes, pretty bullish on zk rollups, and it just it's a tractable problem. It's not like we're trying to do some crazy far out thing where we don't even know if it's possible. It's more just like, yeah, we need the time, and we need to put the engineering effort in to make this stuff easier for developers.
Since Ledger said that, asked the bombshell of like, shouldn't Flow be a database? I want to ask questions like that. The questions where you're like, yeah, does make the industry look kind of like shambolic if you ask the question, but I'll do it anyway, whatever. Do you think that L2s should have tokens?
Yeah,
so you're bullish on zk rollups, right? But like, there's bullish as a scaling solution for Ethereum. Should they have like value capture in their own token though?
Well, I think the question with some of these rollup solutions is just like, how do you decentralize, right? Like, if there's a single operator that is actually putting the call data on chain or doing the proofs, like what happens if they go down, or what happens if they censor transactions, so that maybe they can't perform malicious state transitions, but they could just block your transactions. They say, I don't want to take Cobie's trades or whatever. And so I do think there's room for decentralization for all these things. It's kind of unclear how that's going to happen, but in my mind, it's probably going to be reliant on some sort of token, right? That's how we've always sort of done a progressive decentralization approach, is like, yeah, you get some sort of pro rata share in how this thing reaches consensus through governance or through a literal blockchain consensus based on how many tokens you have. And I think for these rollups, I imagine the tokens will do something similar, where it's going to be, hey, you get to be a prover, or you get to vote on the prover, or you get to do something around sort of making this thing more resilient and more robust over time. And I think to sort of our earlier discussion, like, it's probably going to how you make this thing more fork defensible, right? Like, if you don't issue a token, somebody's going to come out with a rollup or with an L2 that is going to have a token, and so it's almost sort of like a prisoner's dilemma, where you kind of have to issue it to turbocharge your solution. Otherwise, somebody else is going to go out and do it.
Bear market's going to be.
Do you think they're all going to take an extra fee on top?
Probably not. I certainly hope not. Right. It sort of goes back to also what we're talking about around tokenomics, where it's like, at least for right now, it's so early that like you really should be taking that revenue that you'd be getting it and like putting it back into the ecosystem. Maybe there's an argument to be made that the fees go back to pay like an ecosystem fund or something like that, as opposed to like just going back to pure token holders. But ultimately, somebody is running these servers, somebody is compensating developers, like somebody has to get paid. It is a question of who's going to pay it. Maybe it's just inflation for token holders. Maybe it's fees from people who are transacting. Maybe the L1s pay the L2s, right? Like, that's also maybe a crazy possibility. Like, I think there will be some sort of fee involved at some point, but unclear what shape that takes and who's going to pay it.
Cobie, can I ask another one that's just as stupid?
It was not a dumb question.
Are independent like roll-ups, is that basically the same general design idea where like a ZK roll-up has kind of its own design, rolls back to Ethereum? Is that basically the exact same thing as the Cosmos, whatever, parachain app specific chain? Is that the same thing? Like, are we going to see a ZK rollup implementation that's just for this one application, or are most of these rollup designs trying to be like app agnostic?
Well, the ZK rollups that we have right now are app specific, right? So like they're not generalized EVM compatible. You have to write in for Starkware, for example, you have to write in Cairo, and they're designed to do the thing for their specific application. So it's like, yeah, it's a ZK rollup for trading on an AMM, or it's a ZK rollup for trading on those perp decks or whatever. But really the holy grail, right, is you want co-location. You want to be able to go from lending out your assets in a money market to trading on a spot dex to buying an NFT. And you want to be able to do that without having to go back to L1, go to a new L2, or like maybe, swap across different L2s. Like you want to be able to do that sort of co-located. And from a developer experience, part of why we also saw this whole BSC Polygon explosion over the past few months was because they're EVM compatible, right? And that's why Phantom is big now, and that's why Avalanche is big now, is because developers can just pick up their code, deploy on these new chains. If you're a user, you get your MetaMask, switch over the RPC to like this new endpoint. It's all really, really simple. It doesn't take any additional overhead. And I think we've seen is like, EVM is like the JavaScript of crypto development, where it's like not great. It's arguably very, very bad in a sense, but it has this gigantic moat around the developer tooling and ergonomics that are built around it, as well as like the developer experience or the user experience that's being built around it as well. And so like really what you want is that pure EVM compatibility, so you don't have to go out and have these sort of specialized chains, which again require developers to go out and write new code, sort of limit the possibility of co-location. You want it to almost feel like using Ethereum, but it's super fast, super cheap, like all the sort of things that people are striving for in these other L1s right now.
Haseeb seems to talk a lot about layer ones and being bullish on layer ones, and you're talking a lot about rollups and layer two stuff. I'm not sure if that's because we asked you about it, or maybe, hopefully, y'all like disagree, and then you have to figure out how do we allocate our portfolio. Cobie's asked us a lot of people, like, how do you resolve conflict or disagreements about philosophical solutions or technical solutions or whatever. Do y'all disagree on scalability, and how do you resolve conflict within the firm?
I think we actually have a pretty similar view. I think we mostly just talk about L2 because it's like more interesting, right, than like talking about Ethereum. No offense, Ethereum's great, but it's like, I feel like for this crowd, it's maybe less interesting. But I think maybe the space where we disagree is just around like the viability of some of these other layer ones. And I think that's frankly a space that I still haven't fully formed. Like, I think we have seen that. So I think Solana has actually sort of taken me by surprise to an extent around like just the amount of excitement and developer activity that's going on there. We just backed Solend, really like A tier team. I've known the engineers for a while, building on Solana or Phantom. I know the Xerox guys building a really awesome wallet on Solana. And so I think like that's sort of the problem that pretty much every other non-EVM blockchain has faced, which is like getting that developer talent, sort of almost like it's sort of like you need to overcome that initial activation energy where you have some sort of like minimum viable group of devs and users who are like excited about what you're building. And pretty much every other blockchain that isn't EVM compatible has sort of failed to get over that hump. And it seems like Solana has sort of gotten over that hump. And now we'll sort of see what happens, right? Like there is some sort of mini ecosystem, like something sort of happening. The rest sort of depends on like the market reception to whatever gets built and the user reaction to it. I think the thing that I do worry about with some of these other chains is that are trying to be sort of generalized, not just sort of like, it's like if you're going to use Flow, using Flow to buy Top Shots, or using Flow to buy like Disney NFTs, you don't care that much about the Flow ethos and the Flow community, and you're not going to like Flow meetups. My question is kind of like for these other communities, what is their ethos? So like, what do they care about in a bear market? What are they going to be doing? I was going to Ethereum hackathons and ETH meetups and stuff in 2018, 2019. And the people there, really just gave a shit about Ethereum. They think it's cool, and they were just building because it's fun. They weren't building there to like make money. And I think it's fine for people to be financially motivated. I think it's actually very healthy. I do wonder though, like when that sort of dries up, what do a lot of these communities look like, and what's going to sort of be the driving force? And I think that is something that I think both Bitcoin and Ethereum have had going for them forever, which is like this sort of religion or sort of like sense of greater purpose to what people are doing. And the idea of just like building for the sake of building, or some sort of ideology as opposed to, hey, how do we like make money and like, flip food coins or whatever.
Yeah, I think that makes a lot of sense. When chains are EVM compatible, and this is why I think Solana is an interesting example. You say it took you by surprise. When chains are EVM compatible, that like boot coin or whatever you said. Did you say boot coin?
I said food coin.
Food.
Oh, right, food. I thought you was like shortening bootleg coin because it's just like a bootleg version of like ARV or whatever. But when they're EVM compatible, you get so many copy paste projects, right? Where you have like a relatively competent developer who goes, all right, I can port that over here pretty easily, launch token, make 100 million, and I can do it again, and I can do it again.
Right.
And these ecosystems, it means they grow very quickly because there's a lot of like source code they can basically take and use. But it also potentially, and not necessarily, but potentially means that the teams are less sticky. They're just there because there was an opportunity rather than they were like, holy shit, I've been really, really wanting to build an Avalanche since I followed Emin since he was at wherever he was, Cornhole University or whatever.
Cornhole University.
I don't remember where he was.
That's cool.
But on Solana, everything's sort of novel in it. It's not like... Maybe the products aren't novel, maybe the implementations are not even novel, but you've got to do quite a lot of new work in order to make the project work or come to life. And it might make it a little bit more sticky. And Solana have done a lot of developer outreach with all their like various hackathons that I've been invited to judge every time, and I don't think I've ever judged one. I don't think I've ever looked at any of the projects. I always say, yeah, I'll judge it, and then they put my on the site, and then it's over. I'm like, did I do something or not? No? Okay, cool. But they have done a lot of work there to make those things sticky. So I think it's a really interesting thing to pay attention to, especially in like a prolonged bear market, because those are the ecosystems that are much more likely to come alive next time around, where if you paid attention to what was happening on Ethereum through 2018, 19, and early 2020, you could see that there was so much stuff happening there already. And then you got to enjoy DeFi summer and all the early DeFi stuff, I guess. How do you, does Dragonfly take many positions in NFTs or nothing?
I can't. I'm not going to comment.
That's what Thingy said. That's what he said. Yeah, all right. You're not allowed to say. All right, you got the.
Well,
they're compliant.
I would say we own some NFTs as a fund. I'll say that, but I can't go to a ton of detail on it.
What about projects?
You can't say which ones they are.
I'm not going to. I could maybe.
Yeah,
but
that's fine. Yeah, we don't want to know anyway because I hate NFTs. They're all rubbish, and you're going to say something I don't own. But as a firm, outside of like buying specific NFTs, do you take like the shovels type thesis where you're like you investing stuff around the borders of NFTs as well, or do you think it is superior to buy the culture? I guess. Chat saying you're all in dick butts, by the way.
We're big dick butts holders over here at Dragonfly, and we love was it My Lil Uzi and what were the fuck the other all the random NFTs that are on Twitter this week. Yeah, I mean, I think like one thing that I've learned doing venture is like oftentimes you have this debate like, oh, do you do platform or do you go vertical? Like, do you make this bet or do you make this bet? And so often the answer is do both. I think I kind of, learned this lesson and kind of fucked up in like, when I first joined, we did the 1inch seed round, which ended up being a great investment for us. And at the same time, we were also debating doing the Uniswap A. And, I'd known Hayden just because it was, Dex life and, talked to him about the round. And I think Steve sort of went into like, our issues with sort of the metrics and what was going on. And I was like, well, maybe you could do this well, maybe you could do this well. It's like, in reality, the answer was like, just do both. And I think previously I was very, very in love with this aggregation thesis. I think 1inch is obviously still crushing it. Matcha's still doing really well. And Xerxes API is doing really well, being an aggregator. But in reality, it's like, actually like aggregators did really well and Uniswap did really well. And so it's like for the picks and shovels thing, it's a very boring answer, but it's like, we invest in platforms and NFT tooling and NFT fractionalization, but we also want to own, NFTs themselves. I think the problem is like very few NFTs, I would say, are like investment grade. where there's like sufficient liquidity to actually like move size for a fund of our size, and we feel comfortable underwriting them and holding them for like 5 years. There's so many NFTs are like really flash in the pan, and just the amount of investment that you're going to be able to do is not material enough or to sort of also justify the lack of liquidity that you're taking on. So I think that's sort of the answer on NFTs. It's just like there's not enough that I'm actually super excited about, especially for Dragonfly, where it's like, if we're doing it, with these investments, if we want to be putting at least $1 million to work, and I think not many sort of NFTs fit that sort of liquidity profile and investment profile.
That makes sense. I was supposed to buy the 1-inch round, and I think I went on holiday or something, came back and didn't send them no money. Fucking fully rugged myself. I actually did the exact same thing on Ribbon.
I was about to say, it's the second time you've told me this week.
Same thing on Ribbon. So I was like, Ribbon seems really cool. I spoke to Julian a bit, and then just forgot to send the money. I need an assistant or something. Ledger, you busy?
I've begged for access to the magic Cobie spreadsheets of gigabrain ideas that are in your inbox. So you talked about aggregators. So I got to ask, why won't 0x go up? Why 0x just it's like always $1. It's like been $1 for like 4 years. So why won't that number go up?
I was telling Steve I was worried you were going to ask me about this on the show, and in fact, here we are. So, that makes sense. Yeah, I mean, I think 0x has executed really well on their roadmap, right? Metrics look really great, numbers look great. I think 0x API getting integrated in a bunch of different projects, and so you have this sort of evergreen volume versus being dependent on one single product. You have anytime someone's doing a trade on Zapper or Zarian or DeFi Saver, you're doing that trade through 0x API. So I think that they've done a really good job in terms of just building out the product. The question is, of course, around the token. As we sort of discussed earlier, there can often be this disconnect between product traction and token price in sort of both directions. My personal 2 cents on the token is if you think people care about revenue, and I would argue that they often look at revenue instead of looking at volumes or looking at other types of metrics. I think the issue with ZRX as a token is that it's focused on basically gas, which is a function of number of trades and network conditions versus volume, right? So ZRX, when they get a fee, it's structured as a gas rebate for basically the maker, which doesn't really scale proportionally to the value of the trade. So if I'm doing a multi-million-dollar trade, or if I'm doing $1,000 trade, that maker refund is the same. And I think if you look at what successful exchange tokens look like, if you want to model 0x as an exchange token, almost they scale with the amount of US dollar volume that an exchange is doing. So you get generally some cut of fees or some cut of revenue or some way basically to get access to company revenues as the company sort of scales up. And I think that, in my mind, is sort of the issue with 0x right now, which is it's structured as a maker rebate, which is awesome for getting liquidity. And it's sort of really lowered the barrier to entry for market makers to come on to 0x. The problem is that for all the volume that gets routed through a lot of these other protocols, and just the dollar volume the dollar value of volume that they're doing these days, most of that does not sort of get reflected in some sort of token holder value. So I think there's also just issues around reworking the token, right? It's a very sensitive topic. I think most teams, are very sensitive around reworking tokens. So it's hard to sort of say, go ahead and just charge a 25 bit fee and send it back to token holders. I think that would probably put a bullseye on their back from a regulator's perspective. But I think they've done a really good job just around iterating on the product with what they currently have. And I think working the token, even in its current form, from where it came out in 2017, if you remember, it was just a governance plus payment token, which was obviously very, very different. But I give Will and Amir tons of credit in being extremely early on so many things. I think governance and the sort of governance token meme, people forget that was almost like a joke in 2017, right? It was you're not using tokens for fees, or you're not staking your token, governance. Why would anyone care about governance? And now it's all the tokens are governance tokens. Yeah. Will and Amir was super, super early on that. Or NFTs. I very vividly remember this. our team was actually very involved in like forming ERC 721. I actually own ERC721.org, and I sort of like helped build it for the hackathon back in the day. And we were like the first trading protocol to support ERC721 even before Wyvern. And I just remember Will being like, yeah, NFTs are going to be really fucking big. I don't know when it's going to happen, but we have to support them, and they're going to be big someday. And Xerox was the first to support NFTs, and we had a couple different NFT platforms building on top of us back in the day. And I think I would not be surprised to see that sort of get revived with sort of this NFT renaissance that we're seeing. But I think oftentimes they have a vision and a view that eventually comes to manifest, and you just like don't appreciate it at the time. And so I'm sure they're cooking up something crazy that we will only sort of like see the full intent of like 2 or 3 years from now. So
ZRX will still be $1. It's like more stable than DAI.
As it was intended. This is the vision.
Well, they were also early to stable coins. It's just another innovation. I do think it is like in crypto, the general audience rewards you if your token goes up, right? That's how they say your project's been a success. If they got rich on your token by doing nothing, that's sort of like generally seen as the metric of success. And I guess what you're saying about Chainlink, right? Chainlink went up a lot while the product was in very early stages, and that bought them a treasury to build a much better product. But I much prefer when a product is doing really well and the token is kind of like meh. I think Curve is maybe another example of this, where it's like I use Curve quite a lot. I know like tons of people use Curve. It's got billions of dollars in it, and decent volume, and the token just goes sideways as well.
$3 forever.
But I think often that like those cases are much more interesting than the opposite, where like the token's going fucking crazy and you're like, but no one seems to use this thing. It's got like 12,000 users. Why is it going so? Because there's nothing you can do about that, right? There's nothing you can learn from that situation. You can't like take an action on it. You can't short it because it's going to just remain irrational. Or they'll have so much money that they're able to build a product that matches their valuation later. Whereas you can pay much closer attention to those projects that have product market fit and do not have their tokenomics worked out correctly yet. And as we were saying, like basically at the beginning of the call, if you got product market fit without paying those incentives well, you have another tool that you can apply to supercharge growth later. Changing tokenomics is often not a subject people like to touch on, but it is something to watch out for, I think, on a lot of those projects.
I feel like a gold bug right now. Market is wrong.
Just keep holding for another 10 years. It'll pay out. No, I totally agree with you. I mean, we talk about this a lot, where it's like it often just comes down to like style of investment. We see a lot of projects and we're like, this token's probably going to do well, but this product sucks. These metrics look like shit. Like I would never back this, but it's like, I fucking know that the token's going to go up. And it's like, you can make money doing that, but you can also make money just like backing great teams and that are building great products and, have them figure out the tokenomics at some point. And it's like, I know how to do that. I would much rather do that. I find it much more like, rewarding, but you can certainly do it both ways. And so you have to sort of, be cognizant of what you're actually doing when you're doing an investment.
Yeah, that makes sense. The other one, you just like, when you get rugged, you're like, yeah, well, I did realize that could happen. The project does suck and the team does suck. And I thought the token might go up though. The only person to blame is yourself. So one thing that we haven't spoken about much, and honestly, often we don't talk about much on Up Only, and I'm trying to talk about it more because I don't want to miss out on anything. And I use this platform as my research now instead of doing any reading. Are you doing any projects on Bitcoin? Are you backing anything on Bitcoin? Is DeFi on Bitcoin a meme? Is Stacks real? Does anyone use Liquid?
Yeah,
I heard Liquid
it all
was
seems
down.
to be. Liquid was down for a bit. That's right. I'm very unfortunate. Generally speaking, I would say no. I have not really seen many great developer teams building on Bitcoin, or I think the products that are coming out are generally not super inspiring. But in the interest of looking at the metrics and looking at the data, one thing I was very skeptical of for a long time, I've been impressed by, is like Lightning Network. If you look at like the Lightning Network channel capacity, it's going crazy. And it's not a metric that is like easy to fake. There's clearly something going on there. And so I think, like, independent of your previous theses or notions around like Lightning Network, and certainly I was like very skeptical that people want to like spend Bitcoin on like buying lattes and shit, but apparently they do. Like, clearly something real is happening there. So I think we're very open to doing Lightning Network based investments, and it seems to be like a real potential path forward for Bitcoin in terms of building a developer platform, which has always been missing from the space.
Yeah, for a while, Lightning Network had that TVL thing we discussed earlier, where everyone was like, "Look at the TVL, it's going crazy. Look at the capacity," and it's like that's just the Bitcoin price going up.
Yes.
And recently, it started to move pretty heavily, and it's nice as well because it's not incentivized. There's no like Lightning token given out to everyone, or they've got the best kept secret airdrop ever, and Lightning inside as a Sybil attacking it right now. That's what's going on. But I do think it's cool because it is unincentivized. It's just like people that use it because they love Bitcoin or need to use it, which I think is cool.
Can I use my third of 3 allowable stupid questions in one episode?
Mate, you've got infinite. We can use as many as you want. That's the purpose of this podcast. We've got to ask the questions that the people want to hear.
That's right. Cobie just called every single one of y'all an idiot too.
Once again.
Is there really capacity within the Lightning Network or on top of Lightning or whatever, on top of Bitcoin, to actually do compute stuff? Or is it all just send and receive payments? Is it like is the smart contractability a realistic thing within Lightning or on Lightning?
I mean, in theory, you could do like arbitrary state transitions and arbitrary compute. I don't really know what that looks like today, but in theory, it is possible. I don't think anything that would exist right now would be on the level of like a true Turing complete, VM like Ethereum, but you could probably build cool applications and maybe replicate some of the functionality of some of the stuff that people like on Ethereum. Like if you just want to build like a simple DEX for doing like stables to Bitcoin, you could probably do that today. But honestly, I'm not super deep on the latest of the Lightning Network and sort of these Bitcoin sidechains or merge mine sidechains.
And why do you think the Bitcoin community is the only sort of crypto community that is focused on doing like real world payment channel integration stuff instead of creating, I was going to say Ponzi's. I was going to say, he's done it again. The performance art part 2. All right, wrong way around. Oh no, it's back on the right side. I was just saying, why do you think that Bitcoin is the only like crypto community focusing on doing like real world payment channel stuff, whereas everyone else seems to be focused on making Ponzi's or bridges to other Ponzi's or containers for Ponzi's within Ponzi's, Russian dolls of Ponzi's.
Yeah. Good question. I mean, I think Terra actually comes to mind as like an example of pushing sort of like real world POS payments, right? Like pushing UST super hard through Chai in Korea. But yeah, no, I mean, I think one answer could simply be that like that's kind of what they have. Like there aren't crazy Ponzi scheme mechanics on Bitcoin. Even as much as you could say Bitcoin is a Ponzi scheme. Like there's nothing really besides payments, and so like let's make payments really fucking great and like make them super cheap and like make them really accessible. So I think to an extent it's like you're sort of playing to your strengths, and that's what they're able to do. I am curious to see like if a true Turing complete VM type system gets traction on like a Bitcoin sidechain or something like that. It could be potentially interesting, but I think for the most part right now, with a lot of the bridge solutions that we're seeing to Ethereum or Cosmos blockchains as well, it's kind of like splitting hairs between looking at a Bitcoin merge mine chain and just saying, well, if we have a really good bridge to Ethereum or Cosmos or Avalanche or whatever, well, you can just use your Bitcoin there and like it's still cheap and it's still secure, and it's like, why do you need actually like to have this thing be secured by the Bitcoin chain when you could have it be secured by something that is just as good and cheap and equally secure? So it's like I think that's sort of the the counterpoint that has come up in the past few years, which is like now there's actually a competitive good ecosystem to Bitcoin in terms of just like providing that sort of core compute functionality that people want to use their assets for.
That makes sense. I want to ask what's also interesting. I'd love to see if that EVM style, fully Turing complete sidechain did exist on Bitcoin, whether the Bitcoin ecosystem would continue to shun founders getting reward capture through tokenization, because Bitcoin seems to have this ethos that you should just build on Bitcoin. There should be no value capture for founders. Everything's should be sort of similar to Satoshi's, what's the word I'm looking for? Immaculate conception. Yeah. It's not even just a fair launch. It was like this thing that cannot even be reproduced now because you can't do that again because there's so much attention and so much money in the space that people would figure out a way to become, to Sybil attack it or whatever. So they have that sort of anti-token, anti-NFT, whatever mindset, and I wonder if that would continue. And it's interesting either way, right? It's interesting if it does continue because then building anything is basically building a public good or something. And it's also interesting if it doesn't continue because then it's just like a form of tribalism and seeing how communities change. So it's cool. But I'd love to ask about working at VC, and I imagine there's a bunch of people watching who do basically what you say. They read Twitter, they do a bunch of research projects, and figure out what they think is going to be good, blah, blah, blah. But they have another job. And I imagine there's a bunch of people that want to work in crypto too. If you wanted to be working in crypto, would you recommend the VC route? Would you recommend working for a product like you did first? And how would you go about, I guess, getting the opportunity to do either?
Yeah, I think it's a great time to be a founder, I will say. I think the fundraising environment is super competitive. And if you wanted to go do something, I think there's probably capital out there to help you do it if you're qualified to go build something. I think the other cool thing that's cool about crypto is just like it is super flat, and you get people from all walks of life. There isn't that sort of gatekeeping effect that I think you even see in traditional tech companies. So when we're looking at candidates, when I was looking at candidates at 0x, it was like, are you passionate about the space? Are you doing your own research? Are you familiar with how these things work? Like, there's no reason not to be if you're actually passionate about it. The same way, if I'm passionate about a CRM company, sure, like maybe I can know how the product works, but I can't really know all the inner guts of the company and sort of their entire product roadmap and their metrics and like all that kind of stuff, because it's all private and maybe I'm just I can't get access to it. With crypto, it's like all this stuff is out in public and it's all open source. And so, really you sort of like make your own destiny when it comes to your career. There's no one stopping you from going out and building something great. And in fact, many of the great products are built by totally anonymous founders. It's really just sort of almost like a pure measure of your skill and interest. And so I think it's still a great time to be joining crypto. I think like I've actually had so many of my friends who are, Silicon Valley founders or worked at Fangs who are trying to figure out how to get into crypto, hit me up and ask for advice. I think if you want to start a company, it's sort of a big endeavor and it's a big commitment, but it is a great time to be doing it. And I think there's plenty of funding out there if you're interested in doing that. But I also think there's a lot to be learned if you join a company. There's still a lot of upside to be gained by doing that. I think I'm actually really glad I joined 0x and had almost a chance to sort of learn the ropes a bit alongside the team and sort of get more familiar with the crypto ecosystem before I sort of branched out and joined Dragonfly. But I think like overall, like the point being that I think the space is just like so much more exciting and intellectually interesting than anything else that's going on in traditional tech space, that like I think you almost be like foolish to go join Facebook or Google today compared to going joining a DAO or going joining a DeFi project or an NFT project. It's just like in my mind so much more clearly the future than anything else that's going on in the space.
Yeah, speaking ill of your old employer there, mate.
Sorry, I had to do it. Very, very, fashionable these days, but it is also weird to see how, the company's changed so much. Like when I was at IG, it was like 500 people, and now it's just like, I don't know, like 10,000 people. It's just very, very, very different. So kind of a weird time to be at one of those companies.
Do you still hold your Facebook stock? That's not a fair question, is it? I'm not allowed to ask stuff like that.
I'm putting up some price targets for FB right now, looking at some nice resistance levels. Yeah, we should get into general sort of stock day trading, channel. Like that'd be good.
Do you do much directional trading on crypto stuff yourself, or are you just like waste of time?
Not really. I'm not good at it. And it's not, I personally don't find it super interesting, but I do, occasionally, play around on my PA if I buy an NFT or an interesting project. I think that's like pretty kosher. And I think that's also like what gives us our edge at Dragonfly is like we use all this stuff and we think it's interesting. And we go and we, go do yield farms and we go, buy NFTs and join DAOs and like something that I think traditional VCs don't know how to do or can't do. And it's like, kind of why people want to go and talk to us or other crypto VCs that are sort of in the same boat. So I think like, just using these products definitely gives you a different perspective on the landscape versus like, reading about it in the block or reading about it on Twitter.
Yeah, fair enough. What are you going to say, Ledger? You got a puzzled look on your face, mate.
No, I don't know, kind of a comment, but to your point earlier, talking about where we are in terms of crypto within the broader world, people have kind of figured out, they know what like Facebook and Instagram, social networks, the tech space, they kind of know what it is now. And it took a long time to really get there. I worked in the web starting in 2011 full time. And at the time, like it was still kind of weird for people. I feel like in crypto, people don't know what any of this stuff is yet. Like none of it.
Yes.
They hardly know what Bitcoin is. They definitely don't know what Ethereum is, maybe beyond the name. They've heard of Bitcoin. They've heard of like Doge, but they have no real idea about crypto other than there's a lot of money in the ecosystem. And do you think is there like a resolution that needs to occur there where like people need to become more aware of crypto, or like maybe the money is just too much and you need like some kind of 5-year protracted bear market or something to like help things normalize and, kind of meet in the middle?
I think that was actually one of the things that I also got wrong when I started doing investing, which was like, I very much had this view that the way crypto goes mainstream is through these like really nice, safe applications that sort of abstracted all the weird complexities of crypto, right? Like you're using Coinbase or Schwab even or whatever, and it's like, we're putting your money into Compound or we're giving you 3%, and you don't care because most people don't care about that kind of implementation detail of your savings account or something like that. But in reality, what we've seen is like the projects that have done really well are the ones that actually sort of expose those rock guts. Like you have people on like TikTok talking about getting MetaMask, and, like setting it up and like going to OpenSea, and, like buying NFTs. Like that's insane to me. I never would have thought that happened, that people would be willing to jump through all these hoops to get access to these products. And so it says to me that I certainly agree some of this is probably being fueled by speculation and some of the returns and numbers that we're seeing. But I think a lot of it also just fueled by a broader appeal of sort of the crypto ethos, where it's like, people actually do want to like, self-custody stuff, and they want to like poke and play around with this stuff. And they aren't afraid of like, I think a lot of the guts the same way I sort of conceived it, that it would be in it. I don't think there's not a market for sort of this really safe, abstracted out crypto experience that you maybe might get through like a, lending application. But I do think there's maybe a bigger market for crypto native stuff than I previously thought there was.
We got a question in the chat asking how Taiwan's crypto scene is and if it's founder friendly.
It's actually great. The Taiwanese government has sort of almost inadvertently become very crypto friendly. Like, I don't think they really understand what's going on. So they're just like, yes, it's all great. So sort of, de facto very good. But, Taipei, it's a smallish city, but it actually has a pretty solid scene. So like Perpetual protocols out here, Cream protocols out here. I'm trying to think who else. XY Finance is out here. I'm like totally like Fudu Combo, and then a bunch of teams have offices out here. So like I Am Token, Binance. It's actually like it's pretty solid for the size of the city, and it's all like really tight knit, really high quality folks. So it's sort of popping as sort of a competitor to Singapore in terms of like Asia crypto hub.
Are there any other places like worldwide where you think founders should look, or are like, I don't know, friendly or safe towards crypto companies. And then, yeah.
I mean, most folks I know in Asia are moving to Singapore right now. It just seems to be kind of the place to go with respect to being very founder friendly and accessible and kind of a nice place to live. I think in the States, I was actually surprised by the sort of New York scene when I was back in the States over the summer. Like, I lived in the Bay for 10 years, and 2017 to 2019, SF was really where I was at for crypto. Like, you just had a lot of the largest DeFi projects there, and a lot of the Coinbase was there, and like SF was obviously tech capital, but it was also still crypto capital. And I think that is really not the case anymore. It's increasingly decentralized. Like, when we fund teams, we're not funding teams in the Bay Area. We're funding them who are spread all across the world. There's founders in Europe. They have engineers in the States. They have a designer in Asia. Like, it is kind of a meme, but it is very true that these teams are just extremely geographically spread out. But it's also, I think, just spread out to other nexuses. Like, I think New York has done extremely well in terms of attracting talent. Ironically, because it's actually from a regulatory perspective, very scary place to be. But obviously, like, London has a great scene. It seems like Lisbon is sort of emerging. Berlin, like, I think you can really be anywhere now. And it sort of goes back to my earlier comment around funding, which is like the days of having everybody fly out to the Bay and be based in the Bay are just kind of over. Like, that's not how funding works. That's not how talent recruitment works anymore. People are hiring out of their Discords, they're hiring out of their GitHubs. It's just a different, it's a new world.
Do we have any more questions in the chat? Someone said, is Dragonfly investing into gaming?
We're doing a few gaming investments. I don't think any are public right now, but you will certainly see me talking about them on Twitter in the near future. I think I'm a big gamer. That's actually how I met Julian. We played Dota together back in the day. He was extremely good, so he was always carrying my ass. But I'm always looking to see like more great gaming investments. But in my mind, sort of stuff that is gaming focused, that like stands alone on its own. So like. I think actually like Dark Forest in my mind is like one of the coolest products that's out right now, where it's like a true crypto native game that is like fun and sort of uniquely enabled by smart contracts versus like, oh, it's some like random bullshit game and we're going to put the items on a blockchain and so you guys can like flip them and trade them to each other. I think that's just like not super interesting.
Yeah, fair enough. I think that makes sense. I think it seems inevitable that will happen. But you would imagine the best games come from the best game producers rather than like a crypto native, like, here are our items for sale. Yeah. Then we're going to build a game. It's like, right.
Here's a JPEG with a list of items for sale. It's not even like the artwork. It's just,
a lot of those games remind me of like those like Flash game sites back from like the mid 2000s where like you play them during school when you were like bored, and they're just like trash graphics and like super slow, bad animations, like terrible game mechanics. But it was like what you had available, and like people are doing that now. But then it's like on top of Ethereum, so people are like really, really jazzed about the games when it's like the game just kind of sucks.
Someone said, "What is your favorite Dota character?" Are they called characters in Dota?
They're called heroes,
champions
actually.
In League.
Yeah, I know. You guys, heroes. Yeah.
Yeah.
I feel like who I usually play. Play Shadow Shaman on support. I feel like who else I played. Juggernaut. Kind of depends on what the latest meta is like. Who people are picking. So.
This means absolutely nothing to me. Don't even know what that is.
Yeah, I mean, I play League. It looks exactly the same. I still don't know what you're about.
There's a big crypto Dota community. I know Fred from Paradigm is also super into Dota. That was where Fred met Will. It was like the 2016 Dota International. Will Warren from Zero X. So very, very small world.
Nice.
Yeah, those names are also a little bit cringe. I play League of Legends. They got better names, but the game is equally cringe, I think.
I played Magic the Gathering for the first time the other night. Like the actual...
Is that a video game?
The physical card game, like the nerd game. I figured it was a good way to get smart because Sam Trabucco is like, he and SBF, like that was their favorite thing. This is the ultimate game. So I was like, all right, this is my path to becoming a billionaire, is learn Magic the Gathering.
And Mount Gox as well.
Yeah, it's true. I feel like Magic with the cards as like NFTs would actually kill. Like Magic Online was like not that good. Actually, maybe Magic's too nerdy and too niche, but I think it would do. I think it would do well.
Isn't that what Parallel's trying to do?
Yeah, it's basically what Parallel's doing.
That's a good point.
But,
Yeah,
like,
Parallel's
that's
got
your
cards
point.
that say up only in it. Didn't you see?
Yeah, we don't want to FUD those.
Yeah, but it's really small. It's like you got to like zoom into like the crotch or
Yeah,
something.
make a big parallel card.
Yeah, just
turbo
only
green
says
candle.
up only. Anything else from chat? I think they're all just making fun of either me or Ledger now. Seems like it's mostly Ledger. That's good.
As is typical. I will confirm, like Magic was incredibly nerdy, like very, very nerdy characters and stuff. And I guess it's kind of OG. Like if you read fantasy novels, like the early fantasy novels are like where all the tropes come from, I guess, so maybe it makes sense, but.
Yeah. There's something that could. I mean, that's sort of the whole loot thing too, right? Which is like these very, classical, fantasy items and RPG type items, and I think that's sort of where a lot of that stuff came in.
Yeah, I was late for loot, so I bought a Bloot, and that didn't work out very well. Those are like crypto.
Wasn't Blue Beanie Max's thing, and he said he was going
turns
to
out
integrate into everything he does.
Yeah, and it turns out he sucked, and that was like the absolute eco turbo top of his thing. Tom, so one of the things we like to ask that is, for those of us that like want to get to the next level, if you were starting today, let's say you had $100,000 starting capital, what would you do with it? Like to try to level it up, hit $1 million or something before the end of the cycle?
I would, put it into compound finance and earn a solid, 6% return. And, no, I don't know. I mean, I think one thing I keep coming back to when I think about investments that I've done is just like, invest for strength, not for lack of weakness. Like teams that have some sort of magic going for them can figure out some ways to mitigate all the other problems that they're running into, which is again sort of what we've been talking about, like weird tokenomic stuff or like weird growth stuff. It's like you can fix all that if something is working. And so when I think about projects that I get excited about or things that investments that have worked out, it's always been like that team did one thing extremely well, and that sort of mitigated or helped them solve all the other problems that they were facing. So that's, I guess, one thing I always sort of keep coming back to. One thing I've sort of learned over investing.
I like that. One of the other things that I would screw up frequently, still do, is something comes out and I'm like, I'm not buying their 100x because like it's got that kind of vibe, like you're like, wow, this is hot, it's got a lot of momentum. I didn't get in access to this early token, and it listed 100x and then it 10x's again within like 2 months or something. So I would be less afraid to buy somebody else's multiple than I once was, because I've seen enough examples where something hits the market and it still does incredibly well.
Yeah, no, I felt that where I'm just like, this can't keep going up, and then it just keeps going up, and then you look at the metrics, but it's like, and the metrics actually look great, and
Really
so it's
good.
like
it's a value.
Yeah.
It's 1,000x for somebody, but it's a value today. So
yeah, you can't downplay the reflexivity in crypto, where it's like things do well and then it just keeps doing well, and it's like way more so than almost any other industry. You just see that playing out over and over and over again.
It is an interesting change as well, because back in the day, something would go pretty well, and then you'd buy a sort of mimetic or thematically similar thing for the like counter bubble. So like Doge went well, and then a cat related one did well, and then Black coin did well, then white coin went well, and there was all the country coins for a while as well. They're just named after countries instead of food, and they like pumped in order or something, I don't know. Whereas now, because there are metrics, because they're real products, it's not just like a Bitcoin fork with a different name. The winner just continues to win harder, right? And these like sort of mimetic trades don't always do as well because they're just lacking like the actual fundamentals of people using it, or like metrics or whatever that caused the initial one to appreciate in value. So it is a thing that happens in crypto now that I guess people from the older era did not learn. They learned the opposite. It's like, when it gets 10x, you fucking sell and pick the next one with a similar name.
Yeah, no, that is very fair. It's you can't just copy paste Uniswap and sort of hope for the best. Like there needs to be a little bit more something going on under the hood.
Yeah, you need a cute logo. Little one.
Yes. Yeah.
Ledger, someone said, I feel like you guys never talk about Polkadot Kusama. What do you think in general about it? That's the one with the founder who did the weird erotic literature.
I guess so. I don't know.
Gavin Wood?
Yeah, he did that weird erotic literature about a child, remember?
I missed that part of the lore.
Tom's not participating in this.
Yeah.
He deleted it from his blog when people said it was weird. I just wanted to talk about it. They wanted
The
us to talk
reason
about
I
it.
don't
didn't
talk
they?
about it is because as much as I don't know about Cosmos, like take that another degree of separation, and that's how little I know about Polkadot.
Yeah. I'm personally not super big in Polkadot, and I'm familiar at a high level with how it works, but generally speaking, as a fund, we don't do many Polkadot investments, and it seems like I think we're certainly open to things, but traction so far seems to be pretty light. So hard to sort of get excited about the ecosystem, but TBD.
EOS 2.0.
Yes, I mean I would say that. I mean the tech is legit and everything, but it's stuff can always start out with like very little traction, and then you're always amazed at again the sort of reflexivity of it.
Do you think ETH should have a canary network like Kusama?
There's actually a attempt at doing this, and I bought some of it, but it did not seem to go anywhere. Which was I thought it was really cool. It was called Cheap ETH. This was a thing like maybe a year ago. It was actually, I don't know if you know George Hotz, GeoHot, very famous hacker. He was the first person to jailbreak the iPhone and the PS3 and the PS4, and I was doing this
He's doing what? He's doing what, Tom?
Bugged again. What?
George hacked my MacBook. Yeah, no, I was Google Hangouts fucks up on my computer, or Meet, whatever they're calling it now. So
I enjoy it. It's like this
but
game we got going on.
Yeah, well, you guys could do insert a commercial break or something.
That would be what we do if we're smart and if we're good partners.
Yeah. But yeah, it's basically like George Hotz, super legit, basically doing a mini ETH network. It was actually the website is hilarious. It's cheapeth.org, and it's ETH is too fucking expensive. We made ETH 100x cheaper so you can do cool ETH stuff, and it's literally just there's way more ETH. They're making more ETH per block. It's just making it super cheap, but it's still a pure proof of work network. So it's yeah.
I mean, is this just the same thing? Is that the same thing as Ethereum Classic or something?
Well, no, it's an actual up to date Geth node. So
Ethereum
it's not.
Classic's not. I guess they went their own way from a tech perspective.
Yeah, they don't have any of the upgrades. This is literally what if we made our own network that's proof of work, but it's the full Ethereum client. We can do cool shit with it, but it's just cheap, and so you can do wacky cool shit on it that you can't do on Ethereum, which is kind of what Polygon sort of filled that niche eventually. But yeah, I don't know. I'd be curious to see more of that, because I think even with something like 1559, it felt in my mind actually kind of weird that we launched this big upgrade. Yeah, we did a bunch of simulation and research and whatever, but we just sort of fucking went for it. And it's I would actually love to see that kind of get tested out a little bit more before we commit to a huge upgrade like that in the future. So
there's 100%.
I also think that having a canary network where you can test it out more actually accelerates the speed it ends up on mainnet, because you're able to do things that are a little bit riskier on your Kusama equivalent, your canary network, I guess.
Totally.
And I think it would be relatively easy to get people on board with launching a canary network if you just snapshot everyone's ETH holding and you got canary ETH as well. So everyone that holds ETH instantly holds canary ETH as well.
That's what they did. If you own ETH, you own cheap ETH.
Right, I'm going to get cheap ETH.
Cobie's now bullish cheap ETH.
It's not the price is not very high. It's very cheap, unfortunately. But
there's 100%
finally
chance.
A project did what it said it was going to do.
Yeah.
There's 100% chance, because somebody's going to know that I liked it in 2017, that I get a message about Ubic sometime after this, for sure, because it's another version of this where they keep up the upgrades, except it's not called cheap ETH. Cheap ETH is interesting because they're hey, we're cheap ETH. They don't try to be anything else.
Great brand.
All right, Ledger, final question. The questions in chat have just gone downhill They've gone downhill. They're about Tyson Fury or something.
Yeah, now I just got questions about like proof of. We don't have to do it. We're just gonna ask for the alpha. Nobody cares about proof of work. It seems to be like nobody within the Ethereum ecosystem, so we don't have to go that route. At the end of every show, we like to ask for a piece of alpha. It doesn't have to be like how to make more money, although it can be if you want to offer financial advice. But it could be like how could they improve their life? How could they become a little smarter, be a little more efficient, do something a little bit better than they have done before? Maybe a book you've read, article you've read, piece of wisdom that you live by. What kind of advice or alpha could you offer our audience today?
We just need you to make us smarter or happier or more fulfilled. Tell us how we can get such a beautiful head of hair or whatever.
Yeah, I don't think I can get that.
Right. I think, okay, this is going to be really dumb, but it's going to improve your life. So it's just like cheap. It sounds dumb, but it's actually great. I would say the biggest quality of life improvement I made in the past year was like focusing on my sleep. There's like people in the space love to brag about how little they sleep and like how they're always online. And eventually you just like wear yourself in the ground. And there's all these little things you can do to like level up your sleep over time. I used to be a terrible sleeper. I always used to like be really tired and drink a shit ton of coffee. And I still drink a shit ton of coffee, but like there's basically like a step-by-step process around like, like blacking out your room and like turning your temperature down and like not having screens and like blocking blue light and like all these things sort of add up and it makes like a material difference, in my opinion, in the quality of your life. So that's your alpha, which is sleep enough and get high quality sleep, and everything else in your life will improve substantially. So
do you use like
maybe
a sleep
maybe
tracker?
it's also just late, so I'm asleep. I do use a sleep tracker. I have a Whoop. It's pretty good.
I saw one of them the other day. Someone was on about them. They don't have a screen on them, do they? They're just like a band.
Yeah, which is what I like. Is I don't want like the screen bugging me, and battery life is good. So
you got one of those 8 sleep mattresses that cools itself or whatever.
Yes, I'm actually like a super OG 8 sleep person, because I was like this. It came out when I was like trying to improve my sleep, and so I was like, oh, perfect. Like it's a very expensive mattress. Surely this will improve my sleep, and it actually did. It's amazing. So highly recommend the 8 sleep, especially if you're like sleep hot. It's great.
Cobie's
you're like a full trendy sleeper. Like you've got all the sleep gadgets.
It's
you're
in
a
the
sleep
UK
tech.
now.
You're
So
bullish sleep tech.
you have no excuse not to get an 8 sleep. Yeah, I'm a sleep tech guy. You know.
Are you in the sleep finance round? It don't do nothing.
If someone's working on sleep finance, hit me up. I will.
Yeah, the ticker is just ZZZZZZ.
Yeah.
Cobie's actually a natural bear. Like he just hibernates in bear markets and doesn't sleep during bull markets. So if we're going like full super cycle, he's just gonna like fizzle away into nothing.
No, I gave up on that. I did that and through like January to like maybe March, April-ish, and then just was like, all right, that's enough. Nice. That's enough. If it was a super cycle, I can't do this forever. I'm gonna die. So I gave up on that.
That's bullish super cycle then, because I think you would have stuck with it if you thought we were close to the end.
I was very tired.
See, get some sleep.
Thanks, mate. Thanks for coming on.
Appreciate you being here.
Of course, thanks for having me.
We'll link up all the Twitters and everything in the show notes. Thanks, Tom. Appreciate you. Everybody, go to uponly.tv/FTX. Make a trade there today. We appreciate them being our partner despite my bad reads of their promotions. You can earn yield on FTX at uponly.tv/FTX. 5% beyond $10,000, 8% on your first $10,000. Of course, you can track your portfolio like you've known and loved ever since 2014. uponly.tv/FTX. Thanks for being here. Talk to you later. Bye-bye.
Cool. See you guys.
Thank you. Bye, everyone.